Alibaba Cloud is under some serious pressure as Microsoft just reported their cloud segment operations and they're firing at all cylinders. And so this is going to be a tough road for Alibaba as they try to be a global powerhouse, especially when faced against such tough competition. And so that's what I'm going to talk about in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and let's get right into this because this is very important. A lot of us are invested into Alibaba because of the cloud business. However, if the cloud business is not competitive on a global level, then what's the point of Alibaba Cloud making all those investments? Why not just focus on China? Well, we know why they can't just focus on China. There's a lot of domestic threats, and so they have to be an international powerhouse and a competitor against Microsoft, Amazon, and Alphabet. But it doesn't look like it's going their way right now, but hopefully it starts to go their way. And if you recall, Alibaba Cloud's segment results showed only a 4% growth year over year, and 6 months ended, so year to date they're only up 7%. And so Alibaba is smaller and has growth in the cloud segment, which is slowing faster than Microsoft. And what do I mean by that? Well, take a look at Microsoft. Revenues are up 24% for their first quarter of fiscal year 2023, and on a constant currency basis, they're up 31%. Now, they don't have to domicile all of that currency this year. They can wait for the exchange rates to be better before they domicile it, so they don't necessarily have to take that loss. And so the real question is, why is it that their revenue is up so much? Well, it's because they're making a sales mix shift to Azure and other cloud services, and that shift is being made from lower margin products. And so that's what's really pushing them up, and this is what Alibaba is up against. Now, this is their intelligent cloud presentation from their earnings press release. They're telling you that growing offerings or growing the different types of offerings is what's leading to high levels of continued growth in the cloud business for Microsoft. And so this is what Alibaba is going to have to discuss in their investor day. Now recall guys that last year on Alibaba's investor day, I actually lost sleep by covering every single day of their investor day in as much detail, in fact more detail than what Alibaba was even providing, and that amounted to around a 10 or 11 part series. And so if you missed that series, don't worry, I'll link it at the end of this video. But you can see here that this is actually Microsoft's model that I'm using to forecast out their results, and you can get access to this model as well as all of the other models, including my Alibaba model, my Alphabet models, everything else at that lower tier of the Patreons, which is just $5 a month. And if you want to join us for an epic conversation every month where we do a live call and I take your questions on a Zoom call, you can join us at that upper tier. And so this is the only company where they're doing such a great job with their cloud segment that I had to increase their year-over-year growth expectations in cloud to 25% for the next 5 years. So you can see that it's 25% growth into 2027. It probably will be a bumpy road, but I think it averages approximately 25%, and then it drops to around 15% thereafter. But I am not being this aggressive to anybody else's cloud offerings, and what that does, as you can see on the bottom line, it really pushes Microsoft's growth to that sort of like mid-teens level over the next 5 years, and then it comes down to around 11-12% thereafter. So effectively, this is a huge company that still has a ton of growth ahead of them because they're so future focused and they're really good at what they do. But the questions are, what do the other segments look like for Microsoft? Well, you can see here, this is their productivity and business processes segment. This is sort of like their cloud-based Office commercial products segment. That's really what they have here. And they also have LinkedIn here as well. And so you can see that productivity grew by 9% for the fiscal year 2023 Q1 results, but 15% on a constant currency basis. So effectively, they're being hurt by the stronger US dollar right now. They continue to move productivity customers onto their cloud-based offerings, which of course are higher margins as well. And additionally, LinkedIn continues to surge, growing at 17% year over year, and then of course 21% on a constant currency basis. And of course, how am I forecasting this segment out? Well, despite the fact that it grew approximately 15% on a constant currency basis, I'm only growing them for fiscal year 2023 at 10%. And that's only for the next 5 years. And then I expect that the growth rate will decline to around 7.5% thereafter. I might be a little bit optimistic on this segment, but I think that the pessimism in the next segment that I'll explain might offset this a little bit. So what exactly is that next segment? Well, the next segment is their more personal computing segment. This is partly their legacy products, their Windows OEM product. And so we're starting to see the weakening of the consumer in this segment. You can see that fiscal year 2023 in Q1, the segment actually declined, or this particular product declined by 15%. But note that this segment is full of other items as well. So you got the Xbox, which actually grew on a constant currency basis by 1%. But the biggest surprise in this segment in Q1 was the continued strength of search and news advertising revenue. So notice that it grew by 16% and 21% on a constant currency basis. So I'm very surprised here, especially as ad revenues are going down. Now, as we look into the future for this segment, how am I forecasting it out? Well, you can see I'm being very pessimistic here. This is their legacy segment, and I don't expect significant growth here, but I could be wrong. And here's why. So notice I'm only growing it at 0% in fiscal year 2023, which is in line with how much they've grown in Q1 of 2023. And then I'm growing it at 5% thereafter. But here's why I might be wrong. There's 3 reasons. The first reason is that Microsoft just partnered with Netflix on their new ad-supported subscription plan. So of course, that ad revenue that Microsoft is expected to be generating is of course going to increase. And so none of that is being forecasted right now in that segment. Of course, Netflix is a juggernaut. Absolutely, Microsoft will be generating higher levels of ad revs in this environment because of this partnership. The other item is that Microsoft has partnered with Meta to deliver an immersive experience for the metaverse. So I would think that Microsoft would be generating revenues from this partnership. How long does it take to come? Who knows? Which is why I'm not forecasting anything out. But you can absolutely bet that Microsoft will be generating revenues here as well. And then the final item, which I'm missing out on or I'm not forecasting, is if you've been paying attention at all to the Activision deal, remember Microsoft is acquiring Activision. They recently hit some bumps because they screwed up with their wording on the transaction. And if you missed what they did, I'm actually going to link the video at the end of what's going on with the Activision transaction. But effectively, what Microsoft is doing is they're making all the concessions necessary to make up for the strong words that they used when they decided that they were going to try and take Call of Duty away from PlayStation. And so they're likely going to be offering concessions soon to help gain the EU approval of the Activision deal. And I believe that if they can get the EU or European Union approval for the Activision deal, which they do say that they're going to provide by June of 2023 or July of 2023, then you're probably going to get the FTC approval as well in the US. And so this deal will be done. Now, I still believe that this deal will be done. I think Microsoft has to make huge concessions to make sure that Call of Duty always stays on the PlayStation platform. I don't know why they ever decided to not want to do that or why that made it into their sort of strategy in the first place, but they're going to lose if they continue with that. So I don't think they're going to do that. And once again, if this is confusing you, no problem. I will link the video that explains that whole story at the end of this video, so you'll be totally caught up. And recall, guys, just full disclosure, I am betting on this Activision deal, and so I have purchased Activision shares through a stock option type transaction, and so I am very levered to the success of this deal. So I just want to explain to you guys my ridiculous bias in this situation. And you can see that overall, when you combine all of these segments together for Microsoft, I expect mid-teens growth in the next 5 years and then a slowdown thereafter. One could argue that I'm a bit pessimistic on productivity and on personal computing, as I explained, but oh well, we'll see how this plays out. I still think that growing the segments out at the mid-teens in the next 5 years and then the low teens thereafter is optimism enough. And one thing that I do want to point out to you guys is notice that they are expecting a slowdown across the board in their segments as we go into the second quarter of 2023. And so just be aware of that the exceptional results in Q1 of 2023 may not necessarily be reflected thereafter. And so just be aware of that as we go into the remainder of Microsoft's fiscal year 2023. But what does my valuation look like for Microsoft? Well, you can see here that I believe that Microsoft is at least worth approximately $330 and compare that to their current share price of approximately $250, I think that the company is trading at approximately 3/4 of its intrinsic value. And so this is an example of a company that's trading at approximately their fair valuation. And like what Warren Buffett always says, it's always a good idea to pay a fair price for an exceptional company. And I believe Microsoft, more than even Alphabet, is an exceptional company, especially when it comes to managing their shareholders' capital or asset allocation. And here's what I mean by that. Once again, this is the historical cash flow that I provide in the models. And so free cash flow generation is fantastic at 30%, and approximately 90% of the generated free cash flow is returned to shareholders as a share buyback or reinvested into the business. It's only a matter of time, I think, before Berkshire Hathaway begins to purchase shares of Microsoft. I'm not sure why they haven't done so yet. And so I just want you to see this lower line here. Now, mind you, I've covered up the years, but the year on the far right, or that row, is fiscal year 2022, and every year before that is 1 year before. And so notice that stock-based compensation as a free percentage of free cash flow, that's that final line. Notice how it never really goes significantly above 10%. That is an indication that they're really good at allocating capital, and they're not necessarily overpaying, or they're really or their productivity is really high. That's how I would say it. And notice what they're doing with all of their excess capital. They're paying down debt, they're paying dividends, and they're massively buying back shares, as well as investing into the company and making acquisitions. And so this is a very owner-focused company, and this is why I'm highly considering investing in Microsoft over Alphabet. So a lot of you guys on my channel have been asking, why haven't I invested in Alphabet in this environment? Well, the reason why I haven't is because I don't just wait for a particular company's share price to come down. I look at other companies in conjunction with that company's share price coming down. Are there better opportunities in this environment? And from my perspective, I do believe that Microsoft is a better opportunity than Alphabet in this environment. But I wouldn't say that you're making a mistake if you choose to invest in Alphabet. That's not what I'm saying. I'm just saying for myself, Microsoft might be the better opportunity. But you guys let me know why I'm wrong in the comments below. Also, if you have nothing to comment on, just drop a meow in that chat to help with the YouTube algorithm. Now, I did mention that I talked about the Activision deal in detail and why Microsoft almost lost that deal, and you can get to that video right here.